Good morning and welcome to the webinar RIA Fiduciary, that's a hard word to say, 401k plan options. I'm Sienna Rodzinski, Membership Director for the South Dakota Retailers Association. Today's program will feature a presentation by Verlin Hahn of Hahn Financial Group Incorporated in Sioux Falls. Verlin is a 30-plus year financial industry executive and the president co-founder of the Hahn Financial Group in Sioux Falls. Hahn Financial Group is an SEC registered investment advisor incorporated in the state of South Dakota and focuses on employer-sponsored group health plans, retirement plans, investment management, as well as general insurance. So just a few notes before we start. The phones of all attendees are muted, so we won't be hearing any background noises. We will have a question and answer period at the conclusion of the presentation. If you would like to ask a question at any time, just go to the panel on the side of your screen where it says type message here, type your question and click send. At the conclusion of the presentation, we'll read the questions out loud and Verlin will provide the answers. Finally, this webinar is being recorded and will be available under the SDRA YouTube channel soon. There is a link at the bottom of our website. Now we'll turn the presentation over to Verlin.
Well, good morning, everyone, and welcome. Welcome to the South Dakota Retailers RIA Fiduciary 401k plan option. My name, again, is Verlin Hahn. I am a certified financial planner and one of the owners of the Hahn Financial Group. Today with me is Nicholas Boyce, also a certified financial planner and the lead advisor for the SDRA 401k plan and option, as well as Luke Hahn, who has earned his MBA in Business Innovation, and he heads up our health division as health division manager. We would also like to thank the South Dakota Retailers Association for their collaboration in developing this discounted 401k plan for their valued members. Your 401k is an important benefit to help you recruit, retain, and attract top talent for your company. Our turnkey systems help you run a quality plan for both you and your valued employees. Hahn Financial Group, as Sienna mentioned, is a SEC registered investment advisor, and we are fiduciaries, just like the employers that we serve across the country. What are some of the benefits of partnering with the Hahn Financial Group? The Hahn Financial Group serves you as a fiduciary advisor, providing leadership, confidence, and new capabilities through our industry experience, fiduciary advice, and fee transparency. You, as an employer, achieve employer control and an entire business strategy surrounding your 401k retirement plan with turnkey service systems delivered through your partners here at the Hahn Financial Group. The Hahn Financial Group focuses on retirement plans, self-funded health plans with stop loss, and wealth management. We have a national footprint and focus on serving associations and cooperatives and their member employers across the country. Because of our national footprint, we do social distancing very well, and we can serve you and your employees wherever you or they are located. Our mission is to help you and your employees. Our business model is focused on our fiduciary responsibility to provide leadership, confidence, and new capabilities in our interaction with each employer and each of their valued employees. You and your employees deserve a quality plan, quality advice, quality service, low costs with fee transparency, all to help you and your employees grow toward your retirement readiness. So what are the leading reasons to provide a retirement plan? The big picture is to recruit, retain, and attract top employee talent to your business and helping your employees save for retirement. But there's more. The plan design allows the employer to maximize personal contributions, and this of course is optional, In good profit years, you may want to consider maximizing contributions. And in less than stellar profit years, you may want to consider minimizing or stopping contributions. The choice is yours. As always, employer control is paramount. You may reduce your current tax burden with pre-tax contributions, and you may reduce future tax consequences by paying taxes now in return for tax-free growth and tax-free distributions in the future. The ability to diversify future tax consequences is a powerful planning tool. So all plans come with both pre-tax options and after-tax Roth options, and contribution limits are in addition to any potential IRA or Roth IRA contributions. Again, in addition. The 401k is a wonderful tax planning and tax diversification tool if built properly. And the SDRA plan is built to be your turnkey plan for the future. The Hahn Financial Group and our turnkey systems guide you through the process. The turnkey plan allows for flexibility in contributions and ability to plan for tax diversification in accounts and distributions for both the employers and employees. Again, choice is so important in a 401k plan. Let's dig a little deeper into plan design, plan fiduciary oversight, administrative services, and retirement readiness for you and your employees. A 401k must reflect what you and your company want to accomplish. This plan is your plan for you and your employees. Discretionary options include safe harbor plan designs to allow owners and your highly compensated employees to contribute more. Optional profit sharing and cash balance designs may allow contributions approaching as high as $300,000 in a given year. This is a plan that you can grow with. These plan designs and these options are completely optional and discretionary. You, as the employer, can control whether or not you implement or use any of these options. The best 401k plan design is one that you can influence and control as the owner. Now, once you have a great plan design, you also need an administrative team that will help you manage the plan for you and your employees. Your support service starts with your team here at the Hahn Financial Group and expands to your dedicated relationship manager at your third-party administrator and record keeper. Your support team provides personalized service, including an electronic audit file binder. You will also receive turnkey help and guidance to complete annual filings and disclosures. These services allow you to focus on running your business while having your personal service team focus on your plan to achieve the highest outcomes. Based on a study by AllianceBernstein, and AllianceBernstein is a global investment management and research firm, nearly 1/2 of all plan sponsors do not personally consider themselves to be fiduciaries, but plan sponsors and owners are indeed fiduciaries, whether you want to be or not. But I have some good news for you. We here at Hahn Financial Group are also fiduciaries. We can work together to deliver overall fiduciary responsibilities while guiding you with our consistent processes and helping you to document, follow, and implement overall fiduciary oversight. We do this through investment selection and monitoring, fee benchmarking, and employee education, all again delivered to you in a turnkey system. The main ingredient of fiduciary oversight is to have a documented, consistent, repeatable process and to diligently follow that process. We help guide your design and implement that consistent process, including paying close attention to your overall plan costs, your plan design, your fund lineup, your fund performance, and transactional compliance with a focus on overall employee retirement outcomes. An appropriately built fiduciary 401k plan is a powerful retirement savings vehicle. We help you shape your retirement plan design, and we help you implement your decisions. Focusing on employee education, participant income replacement ratios, and financial peace of mind for your employees creates an environment of success for your plan. Behind the scenes, we can monitor this through plan participation rates, deferral rates, and by monitoring investment diversification. All of these services are provided for you in a turnkey manner. You continue to run your day-to-day business. We give you the executive summaries and recommendations to guide your retirement program direction and decisions. As your plan advisor, we help you develop, grow, and monitor your plan. Overall education for you and your employees is the starting point. But then, as a fiduciary, it is also important to have diversification within your retirement assets and fee transparency to keep costs low. The big three to running a successful retirement plan are employee education, having a quality investment lineup, and maintaining cost control through fee transparency. Fee transparency is worth repeating. In the same manner that fee transparency helps us drive down the costs of our self-funded health plans with stop loss, the complete fee disclosure transparency also drives down the overall costs in a 401k plan. Incidentally, there's also an additional fee reduction for the SDRA Fiduciary 401k plan option. Add these planning items to a fiduciary advisor like the Hahn Financial Group, and you have the opportunity to help grow your 401k success for you and your business. At all plan reviews, but also anytime upon request, we help you measure your plan success through our executive summaries. You are busy building your business, and you need your plan information delivered to you in an easy to read, easy to understand, and easy to implement manner. Your personalized executive summary will provide just that. It is a snapshot of where you are and the ongoing progress over the past year in your plan. And when we say turnkey, we mean turnkey. Executive summaries are a good example. You run your business, we provide the guidance on your 401k plan. We help you help your employees, whether as a takeover plan to improve your current plan or a startup plan. We are here with turnkey solutions to make your life easier and your plan more effective. We take care of you and your business, including tax credits. And that's right, I said tax credits, and tax credits are valuable. These are tax credits, and these are currently available for new startup plans and for takeover plans that add automatic enrollment as a feature for their plan. We help simplify the 401k process, and we use industry best practices. We also help focus your plan to achieve your goals for you and your business. Also, if your current plan has issues, we help with voluntary correction procedures on plans that we'll be taking over. And because this is not our first rodeo, we will help you stay on the right track to help yourself and your employees grow in your fiduciary 401k plan and your personal pursuit of retirement readiness. First, we discussed what you want to accomplish in getting you started with our turnkey system. If you have a current plan, we'll review that plan, the investments and the fee structure, and create a recommendation for you and your company. If you desire to start a plan, that is also a specialty of ours. Our turnkey system makes it easy for you to either start up a new plan or transfer your existing plan. Either way, the opportunity is yours. The SDRA Fiduciary 401k plan option is your fiduciary option. Congratulations. Knowledge is power. There is a difference between having something done and having it done as well as it could or should be done. Even if you have a current plan, you deserve to see what the Turnkey Fiduciary 401k plan option can do for you and for your employees. Let us provide you with leadership. Through our experience, you gain employer control. Let us provide you with confidence through fiduciary advice to formulate your business strategy for your business needs in a retirement plan. Let us grow your new capabilities through fee transparency and service orientation to guide you and to help you and your employees achieve the retirement readiness that you and they deserve. Remember, the best time to plant a tree was 20 years ago. The second best time is today. Let the Hahn Financial Group start helping you today. The South Dakota Retailers Association Turnkey Fiduciary 401k plan is built to help employers recruit, retain, and attract top talent to your company. The SDRA discounted plan is also built to help you and your employees be better prepared for your financial future. Call or email us today to receive a one-page executive summary for your review. So let's have a conversation on how you might benefit from the South Dakota Retailers Association Turnkey Discounted Fiduciary 401k plan option. Thank you.
All right, thank you, Verlin. That was a great webinar. We do have a few questions that I'll run through here, and if you can provide the answers, that would be wonderful. Is now a good time or a bad time to move my plan based on where the market is?
That's always a question that we get, whether the market is up or down. When you move 401k plans, you're simply sliding over wherever the market is. So if the market is high, we're moving over. While the market is high, we're simply sliding over from one investment lineup to a new investment lineup. If the market is lower, we're simply moving over at that lower rate. So it's more of a theory of sliding over than it is trying to pick or time the market. But great question.
So can I start my plan on a date different than January 1st?
You can. Now, many employers like to run a calendar year plan, so we can start the first of any month, but then behind the scenes, we might run a short plan year in order to catch up to January 1st, or if you don't mind, a plan year that runs during some other time frame, we can do that too. So we find out really what the business owner wants to accomplish with their plan year, but we can indeed start the first of any month.
Okay. Is there a minimum plan size?
Another great question. No, we do solo 401ks too. So if we have a single member owner, just a small business where maybe they don't even have an employee, we can do a plan like that. And we also have no upper limits to our plans either. Generally, for a full non-solo 401k, we probably need an owner and at least one employee. But again, we have plans with hundreds of employees. In fact, we have a plan with thousands of employees. So we can handle the smaller plans as well as the larger plans.
Great. What is the current process to transfer a current plan?
Another great question. There's really only 3 items that we need, and we help the employer find these items if they don't have them handy. Number 1, we need a copy of their current adoption agreement. Because we're fiduciaries, we do need to take a look at the current agreement and give advice on areas of improvement for it or areas that we want to maintain. We do need a fee disclosure to understand the fees on the current plan, and then a current census. With those three items, we can get everything started. It's actually a fairly easy process in our industry. It's been streamlined over the last number of years to make it easier for an employer to have the plan of their choosing.
Okay. Can an employee begin contributing? When can an employee begin contributing? Does it start immediately after they're hired, or is there a waiting period?
Another great question, and that depends upon plan design. The employer can allow an employee to join immediately, or a very common method to make sure that the employee is a long-term employee is to have a one-year waiting period, and then the employee can start on the first day of the first complete quarter following 1 year of service. But having said that, the plan design, especially on a new plan, you can grandfather all of your current employees in and then start new employees with either a waiting period, or you can bring them in immediately. This is part of our turnkey process where we find out what the employer desires to accomplish. And if you want a little bit of a waiting period, you can have that. But if you want basically instant availability of the 401k plan, we can also write that into the plan document.
Okay. How do tax credits work? I heard that in the webinar.
Tax credits are much better than a tax deduction because it is truly a credit against the taxes that you owe. Now, the formula through the Secure Act is a little bit complicated. The verbiage involves the number of employees that are going to be on the plan. But in a nutshell, up to $5,000 is available. Again, you may not qualify for all of it, but up to $5,000 in tax credits. That means if you owe $8,000 in taxes and you have a $5,000 credit, you now only owe $3,000 in taxes. On takeover plans, you can also have up to a $500 credit per year. So again, over the next 3 years, $1,500 of credit if we add an automatic enrollment provision. Now, I don't want the tail to wag the dog on this. We want to talk through what an automatic enrollment provision is, but it is an option that we give to our employers, and most employers do have a degree of interest in, even if it's $1,500 over the next 3 years, that's $1,500 less in taxes, simply by considering automatic enrollment as part of their plan design in the takeover. So again, each of these answers might be more specific to the particular employer and their number of employees, but that's part of what we do every day.
Okay. So will you work with my current CPA on whether I should contribute pre-tax or Roth?
And certainly we will. In fact, I teasingly tell our participants that in the months of November and December, and also April, I get more calls from tax advisors and CPAs than I do from participants. Why do they call in November and December? Because these 401k plans are calendar year tight. So to get the advantage for an employer and employee through a 401k plan, we have to get the additional contributions in by the end of the year, with one exception. If an employer has a profit sharing plan, we have all the way up to the time they file their tax return to make that profit sharing contribution and have it applicable for the previous year. And incidentally, for profit sharing contributions, we always run the numbers first so the employer can decide the amount, if any, of profit sharing they'd like to declare for the year, and they also know what it does to their bottom line on their taxes. And why April? It's because we also work with IRAs and Roth IRAs, and there you have up to tax filing time April 15th. This year's an aberration. This year you had all the way up till July 15th, but in a normal year, it's April 15th. So again, it's not our first rodeo, and there is an advantage in the fact that we serve thousands of participants across the country.
Okay. How much can you borrow from your 401k?
That's a good question too. You can borrow up to half of your account balance or $50,000, whichever is less. Now, the neat thing here is we have business owners that may store a little bit more money in the 401k than they want, and they might have a sudden cash need. And indeed, we can get out up to $50,000 per plan. So if you have a smaller owner where, let's say, the two spouses own the company, you can get $50,000 out of each plan if they have a balance of at least $100,000. Let's go to non-spouses. If you have a number of owners, we take the number of owners, again, as long as they have a balance of $100,000 or more, and you can do $50,000 per owner. So it is possible to use the 401k plan as a liquidity device for an owner. For participants, again, it provides them for liquidity for whatever their day-to-day needs might be too.
Great. This is a two-part. Can you add children and or board members to the plan? Again, a question we get commonly with smaller businesses for the children and board members for larger businesses. So let's start with the children. As long as they're on payroll and contributing to the business, we can add to the plan document that children can indeed be added to the plan. Again, we just have to have legitimate payroll for the children. So if they're on payroll, and we just did this for a plan here in South Dakota, their 16-year-old basically works full-time over summer. So we made sure that the plan document allowed that 16-year-old to contribute to the plan. Board members, as long as they receive compensation as a board member, we can do a separate carve-in for board members to be able to participate. They can only participate to the degree of their compensation for their board duties. But if there's employer contributions, we can also have employer contributions go to the board members in addition. So again, it all depends what that individual employer wishes to accomplish with their plan. These plans have a great deal of flexibility. Wonderful. Berlin, thank you. Those are the questions for now. If anybody has any questions, additional questions that they'd like to ask, you can certainly contact our office at 605-224-5050. And just a reminder that we have some upcoming webinars. Watch for those on our website at sdra.org. And I want to thank everyone for participating in today's program. Thank you so much.